This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look at the gold market. On the gold market you can see that price still calling around the tested and reached the 618 extension target of this big ABCD pattern, and take a look, slightly lower than this previous swing low. Well, in general guys, as longer market stands below it and slightly lower than this target, the higher the probability that some deep retracement could happen, because that situation is very similar to euro currency but in the opposite direction. And in fact, such areas where market just breaks through previous extremes, previous lows or highs, it's very comfortable for showing some sort of the failure breakouts, for washing greens, grabbing the stops and returning right back up again. But if market doesn't do that, it tells that probably it has real intentions to continue move lower. When the market just breaks through some significant extremes and stands above it or below them, currently we see that it stands below the previous broken lows, this tells us that market probably could have real bearish pressure and bearish intention to continue move lower. That's why as longer market stands below it, as I said, the smaller the chances that we could get some some greater bounce to the upside, as we initially suggested, to the 1279, 1280 area where stands the weekly pivot resistance one. Besides, till the end of the week, just one trading session will be tomorrow. But currently, still we could get some assistance from the daily time frame chart if market will show some minor splash. Take a look, the MACD predictor stands very close, and if we will get, for instance, the bearish stop grabber tomorrow, that will be the great assistance to us, because that could become the trigger and pattern, the pattern that could trigger the continuation to the downside, to the lower target. And we know that the next destination point on the gold market will be right here, 1118. So that is previous lows on the daily, on the weekly time frame chart. That's why showing by even minor bounce here for reaching the MACD predictor and forming, for instance, the stop grabber, that will be just great stability for us. On the hourly time frame chart, let's take a look how this overall action develops. So here's our thoughts. We said that market usually after the first reversal swing, when the market forms the reversal swing, other words, when the market forms the swing that is greater previous swing in the opposite direction, so we see that this swing up is greater than previous swing down. That's why we call this the reversal. Usually after reversal swing, market shows deep retracements. We already have explained that, because market previously has strong bearish momentum and it just can't overrule it. It just can't turn to the upside and continue move to the upside, because this previous momentum is presses on the market and just doesn't let him easily move further to the upside. That's why very often when the market forms reversal swing after significant previous move in the opposite direction, it shows the ABCD retracements, compounding retracements. So here we see the same again. Market has shown this ABCD retracement to the 618 support of the major swing up. Actually, this gives us the confirmed and completed pattern. It's called the Gartley's 222Y. Initial swing up, ABCD retracement to the support, and theoretically, if market has intention to continue move higher and show deeper retracement, it should do this right from this area. So any move lower here will simultaneously tell us that we will see the taking out of these lows and downward continuation, because that will be just the failure and erasing of the breaking of the Gartley's 222Y. So move below this level will be absolutely unlogical and for bullish development here, and will tell us that market is really weak and it has no intention to continue move to the upside. We do not even need to wait when the market will take out of these lows. Even breaking through these lows will tell us that we should be ready for downward continuation. Conversely, if market will show the bounce from this area, unfortunately we hardly will see reaching of the weekly pivot point already, because this retracement too deep. If it stop right here or even higher, the confluence support previously we have discussed it. In this case we could count on some ABCD that could reach potentially the weekly pivot resistance one. But as retracement is deep and extension in time, maximum that we could see probably is just testing the weekly pivot point again. But if you'll take a look at the daily time frame chart, you'll see that that will be significant. That will be enough to form the bearish stop grabber. So if even market will show the appreciation of this potential ABCD pattern to the upside, and just measure the leg and count it to the upside, okay, from that level, even if it will form this ABCD, take a look, that will be significant for reaching the weekly pivot point and to form the bearish, potentially bearish pattern. So that is in fact two moments to watch for. If market will start upward action to the upside, it's not even necessary to form the ABCD equal AB equals CD pattern. If even market will form 618 extension right here, that also will be significant and sufficient for creating the stop grabber on the daily time frame chart. That's also possible. The market could continue not even with the equal legs, but market could show just minor continuation to the minor target. That also will be the Gartner's triple to buy. Well, that's in fact two moments to watch for. If market will start move to the upside, wait for ending of this potential retracement, and probably this retracement will be weak. And if this will give us the bearish stop grabber on the daily time frame chart, that will be the great opportunity for taking the short position, with the expectation that market will take it out to these lows and continue move lower. And second moment to watch for is this coil. If market, as I said, will take out of these lows, break through this support, break the Gartner's triple to buy pattern, this will be the bearish setup by itself. And it also tells us that market is ready for downward continuation. That's in fact two moments to watch for on the gold market right now.